What's going on, guys? Welcome back to another video. In this video today, I'm gonna break down the first step of the home buying process. You need to go talk with a mortgage lender and how you can get the best deal possible and how to ultimately go pick a mortgage lender because there's so many out there. That's coming up right after this. Throughout all the deals I've done in real estate, I see multiple people make wrong decisions when they pick out mortgage lenders, right? Because it's a friend or it's a family member and you can't deter them away to go pick out someone that you know can give them a better deal. So I'm gonna explain to you guys how to get the best deal possible when you talk with a mortgage lender so you can get the best interest rate and ultimately save more money on your loan over 30 years or 15 years or whatever the maturity date is on your loan. For most people, we're gonna have two options when you decide you wanna buy a house and you wanna pick a mortgage lender. Most of us bank with a corporate bank, right? So we're talking about JP Morgan, Bank of America, Citibank, the big name banks that you see when you're just driving down the street. Now, in my mind, there's about two options when you decide to buy a house and you need to go pick a mortgage lender. The first one is you can go to a corporate bank, right? So this is gonna be a Bank of America, a JP Morgan, a Citibank, right? So basically any of those big name banks that you're driving down the street and you see are most likely gonna be a corporate bank. And most of these have a lending side to the bank where you can walk in and get lending directly through them. Now, a lot of people will just go to these banks because it's convenient. They're already banking with them. They might already have a relationship. You know, they can set them up with a referral for a mortgage lender, go into their office and get pre-approved, you know, in a couple days. But I'm gonna tell you that this is the wrong way to do it. With my experience in all the deals that I've done, all the people that have decided to go to a corporate bank, probably just because they've already banked through there, right? They don't know who else to go to. What I've seen is that the flexibility of getting them approved, there isn't a lot of flexibility. It's very strict because it's corporate. They have to go line to line to line and they have to meet all the criteria. And also just with the inspection, the appraisal, I found all these deals on a real estate agent side to be a lot more complicated to say if they just went through a mortgage broker that owns their own company. Now, on the other end, you can go to a mortgage broker, right? A mortgage broker isn't gonna provide the lending directly through them, right? They're gonna have to shop out, try to get the best rate through another lender that they can provide you. So there's a lot more flexibility with this. A lot of these people own their own mortgage companies, so they don't have the strict requirements of a corporate bank when it comes down to interest rate, your debt to income, and everything that's required to qualify you for a mortgage. On top of this, mortgage brokers have really competitive rates. And I'll say that again, they have really competitive rates. You can get a just as good or better interest rate with going with a mortgage broker rather than one of these big banks. Now, this is a great example of what I'm talking about. One of my clients was trying to get pre-approved through BECU, and she loved this house, but it needed a lot of work. The roof was shot, there was some electrical problems, and I have a preferred lender that I use on all my deals, and we love him. He's a mortgage broker, so he owns his own mortgage company. And I called him up and I said, you know, my client's trying to get approved by BECU. You know, is the appraiser gonna accept that the roof shot? Because she was trying to get conventional financing. So it's very strict with, you know, how the house presents itself. You know, you can't have a roof that's leaking and there was multiple electrical problems, right? So if she tried to buy that house with BECU, she would have never got conventional financing. So she actually went to my lender, the mortgage broker, and because he owns his own company, he's not abided by all these corporate rules and regulations, right? He still has rules that, you know, for pre-approval, but you know, it's a little bit more flexible when it comes into, you know, if you're right on the edge, can you get the financing Can you get the certain type of financing? And we worked around the deal and got her the house at a great price with conventional financing that a corporate bank would have never gave financing for that house. And when they would have shut her out, she would have lost the house. So that's a perfect example of, houses that, maybe are shot, maybe the listing agent's saying that, you can get conventional financing, but a lot of these corporate banks will send their appraisers out and they will not accept conventional financing on these properties, because there's almost a fixer-upper property, but a mortgage broker is a little bit more lenient, a little bit more flexible, and is able to get this approved and get you the house. So now that we covered that, the second part to picking out a mortgage lender and something you need to understand is what's called the loan processing fee, the loan origination fee. Right, this is charged by the lender for processing a new loan application, and normally it's 0.5 to 1% of the loan amount due at closing, right? So if you take out a $500,000 loan, this amount could be $5,000 or $2,500, so it's really expensive. But what I want to let you know is this is 100% negotiable. Just like anything in a real estate transaction, you can negotiate this with a mortgage lender. So this leads me to number 3, and I want you to shop around for the best interest rate. This doesn't mean just go to your first mortgage lender and go through with the loan. No, I want you to go to multiple mortgage lenders, 2, 3, 4, 5, 6, and what you do is you take the first mortgage lender's quote, take it to the second bank and say, can you beat this? Most of the time they will beat this, right? Because they want to give you the loan and they want to start building that interest over time, which is, why they're in business, why they're making money. So ultimately, when you get that second one, take it to the third and just repeat the process, repeat and rinse until you get the best deal possible and then go with that mortgage lender. A lot of people might be saying, Alex, this is unprofessional, this is unethical, blah, 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 blah. Well, when it comes down to it, you're trying to get the best deal possible, and if you can save thousands and thousands of dollars of interest and loan origination fees and closing costs up front when you buy the house, why would you not shop around for the best deal possible? When you're doing a business transaction, you can't think of people's feelings, right? You're out there to try to get the best deal possible and save yourself the most amount of money. And to put it in perspective, if you were to take out a $500,000 loan today at a 30-year fixed mortgage, right, with a starting interest rate of 4%, your total interest over that life of the loan would be $359,348. Now let's say if you negotiated that interest rate down 0.5% to 3.5%, your total interest for that loan would be $308,280. So you just saved yourself about $52,000 of interest over the life of the loan by just negotiating and going to multiple lenders and trying to get the best deal possible. And on a monthly basis, that would be $140 saved every single month and more money in your pocket. There you guys have it. Hopefully you got some type of value out of this video. And if you did, hit that like and subscribe button. And as always, stay tuned for future videos and we'll see you on the next one, guys. Peace.